that is a keynote on the topic given by Rob. So I will quickly give you a brief on that. That is the digital transformation across the insurance value chain, a path to maturity and value creation. And who else can we have? It's a good friend, the mentor to the insurance industry, and the most interesting man in insurance today. That is Mr. Rob Galbraith. Rob has over 20 years of experience in the financial services industry in a variety of positions in the fields of property and casualty insurance, banking and investment markets. He holds a Master's of Science in Insurance Management from Boston University and a Bachelor of Arts in Economics from Michigan State University. Rob earned his Chartered Property Casualty Underwriter designation in 2003 and has served in leadership roles both at a national and local chapter level. He was elected to serve on the CPCU Society's Leadership Council from 2016 to 2018, and previously he served on the Industry Advisory Board to the institutes. Rob received the Lohman Award for Outstanding Service to the Alamo chapter for the CPCU Society in 2009, besides many other accolades. To add to this, Rob has been ranked as high as number 6 on the Insurtech London Top 100 Influencers. Rob's passion is finding ways to provide insurance products to all who have a need through innovative approaches that leverage the latest in technology, building strong relationships with a diverse network of people from a variety of disciplines and educating the public on the risk they face. So welcome, Rob, and thanks for your time today. It's indeed an honor to have you at the show of Insurtech Story once again. And ladies and gentlemen, he's joining us from Texas. So very good morning to you, Rob. Over to you. Also, Mr. Ganguly, if you could share the presentation that Rob would provide.
Fantastic. Thank you so much, Surya. And it's a pleasure to be with all of you here today. Surya, you forgot to mention in all those wonderful things that I was on your podcast as one of the earliest guests. So that's probably one of the biggest honors.
Also, one more thing, Rob, you are, just one more thing to say, Rob is the author of the book, The End of Insurance as We Know It. So you can check it out. It's available online on Amazon and as well as ebooks and Amazon ebook, I mean to say, that is Kindle. Yeah, over to you, Rob.
Thank you so much, Surya. And of course, I'm running into issues with GoToMeeting on sharing. It wants me to set some privacy settings. So I don't know, maybe perhaps if you can share the deck that I sent over to you and I can just ask you to advance the slides.
Yes, let me just quickly go into that.
Yeah, sorry, I clicked on share and it says you need to enable this and restart GoToMeeting and all sorts of stuff I wasn't expecting. So I guess I should have tested it out earlier. Yeah, this is life in 2021. Everything is disabled for your protection, for privacy and security. But so as Surya assisted me, we did plan for this. I did send him my slides in advance for exactly this contingency. I just wanted to say it's an honor to be with all of you here today. And I really share your passion for this space. I love meeting innovators from all across the world, and I know each of you is coming from a different part of the world and is focused in different discipline, different domain expertise. And so my comments today will be fairly broad and high level, but hopefully you'll find some inspiration and applicability for your particular problem and challenge in your corner of the world that you're attempting to solve. And I'm happy to have a little bit of Q&A at the end, and certainly, can connect on LinkedIn or WhatsApp or otherwise to continue the conversation afterwards. I'll go ahead to the next slide, Surya. So yes. I want to begin my comments by telling you a bit of a story, and this is something that I relate at the beginning of my book, The End of Insurance as We Know It. But I think it's a really good analogy to what we're the world that we're facing today, and really the revolution that that is upon us with Insurtech. A couple of years ago, I guess now it's almost 3 years ago, I went on a road trip with my father, who's 86 years old, and he lives about 20 minutes away from me here in Texas. My father has what is considered his baby sister. So she is in her mid 60s. She was actually born his senior year of high school, right before he graduated and went on to university. And so she lives with her husband on the Galbraith family farm that is in upstate New York, kind of in the middle of the state, about an hour from Syracuse University, so very central in the state of New York. It's about a 3-day drive up from us. And my father has a harder time getting around. Flying an airplane just wasn't something that was really possible for him. And so I told him that I would give him a road trip to see his sister and the family farm one last time before he gets to the point where it's just too difficult. And so when I went to pick him up, he actually was in the car. He brought this armful of paper maps in the car with him. And I remember as a child, we did a lot of road trips for our family vacations, and I loved following maps. I loved even drawing maps. Some of my earliest pictures were not of superheroes or sports stars, but were city of Buffalo, and I loved just the freeways and highways. I loved being able to study a map and look at the mileage and look at the type of road it was, and to make an estimate on how far we were progressing, how long it would take us to reach our destination. And so we spent 3 days getting up there, spent a week on the family farm, and then coming back, I was a bit tired at that time. I was doing all the driving. I was ready to get back to my wife, my 3 kids, get back to my work. And so I was using this tool on the right that many of you are probably now accustomed to in your daily life, GPS. And my father and I repeatedly got into arguments on the best way to travel. And my father had actually traveled this length of this part of the country and this length of road much more than I had. So he had a lot more experience driving these roads, and he had his trusty tool that he had come to rely on over decades, these paper maps. And so you would think that he would be in the best position, having more experience driving this road, having this navigation tool that we've relied upon for decades to guide us home in the most efficient way. But in reality, myself, who hasn't driven as much, but I have access to a superior technology, superior tool, GPS. And if you think about it, GPS has really kind of come to take over our lives over maps, which were used not just for decades, but for centuries. Ship captains, right, traversing the world, and we've really it's a technology that's been proven over centuries. And yet, when GPS first came out, we kind of would laugh at some of the simple mistakes that it would make. We often knew a better route than GPS, but clearly, major companies, Amazon or Apple and Google have really invested in this technology to the point where many of us use it, even if we know where we're going, because we want to see the most efficient route, because it takes into account traffic conditions at that moment in time. It takes into consideration any construction that might be occurring, or any variables that a traditional map cannot pick up. And so we were actually at this inflection point here, kind of at the southern tip of Illinois, where I wanted to take the southern route that you see, and my father was arguing for this northern route. And at the time I took the screenshot, you could see that there wasn't a big difference, just about 25 minutes off a 15-hour journey. But at that time, that particular moment, there was actually a 4-hour difference between the southern route and the northern route because of the traffic conditions, accidents, construction, et cetera. And so we got in a very heated argument about it. And I just realized that, I had access to some of the best technology. Unfortunately, my father didn't, I guess, accept that. And so I made one fatal mistake, which was I told him that because this was his one trip, he could pick the route. So click advance just one more, Surya, on the slide. And so, if you think about some of the elements that go into GPS and that make it superior to maps. There's a lot of elements there that really apply more broadly in the insurance space that I think are critically important for both existing traditional players to understand and to leverage, as well as startups. And that is that you have access to sensors. So you actually can kind of observe behavior directly. And this isn't just necessarily some of the telematics that you can certainly get from your vehicle through your phone in terms of braking speed, are you going above the speed limit, things like that. If you think about wearable devices, I know some conversation in the previous panel on life and health insurance. The fact that you could actually adjust your life insurance premiums based on the health of the individual. You used to never be able to do that before. It's kind of, a term life would be issued, and then the next 20 or 30 years you were on that risk and you couldn't adjust the pricing. Now you have the ability to do that. Agriculture, we mentioned crop insurance and many others. And so there's a whole plethora of, through miniaturization of chips, gathering essentially steady streams of data all day, every day, that we don't have to guess somebody's auto insurance rates, motor insurance rates, based on things like their age, their gender, their marital status, things that were loosely correlated with risk, but we didn't really know. We know that there's some 35-year-old married females that are not as good a driver as an 18-year-old single male, but we know those groups on average perform differently. But what about these two individuals? Well, now we can tell through sensors. But it's not just the sensors in the phone. That by itself really wouldn't make a meaningful difference. It's also access to cloud computing, where we essentially have unlimited storage today. I grew up in a time where when you were programming, you really cared about, is this an integer or a floating decimal, right? Is this a string or a character? And you were always trying to conserve storage. And I think we hit kind of a tipping point probably even 10 years ago, and certainly we're there now, where I know that my personal kind of cheap internet email had 10 times the storage of my corporate email at this really large carrier in the US. And so we were always asking, like, why do I have a 50 megabit limit on my corporate account, which is much more important, but all the spam emails, I've got a gigabyte of storage, right? And again, things have gotten ever explosive. So, we don't need to make those trade-offs anymore. We can basically gather all the data that we can possibly think of that might be interesting to look at, that might be important, that might be relevant, and we don't have to kind of make this, cost quantity trade-off. And clearly, again, in the GPS example, we're able to use cellular towers, again, through wearables and others. You might be able to use things like Bluetooth, Wi-Fi, et cetera, to transmit the data to the cloud. The other part that's really important is that when all of the information from your phone or whatever the sensor is, when it's uploaded to the cloud, it's not that somebody is then downloading that and looking at the Excel spreadsheet. I know Jose was talking about Excel earlier, kind of had a chuckle. When we think about, well, an analyst and how do I make sense of this data? How do I find patterns in this data? Again, it's not somebody that's trying to do a VLOOKUP or summarizing this. We're using AI, artificial intelligence, to process it. And so that is what's kind of going through, not just kind of my current route, but it's gathering the information from everyone else's phone on their routes, their driving speed, and it's coming up with out of the millions of possible routes home, right, from the southern tip of Illinois to San Antonio, Texas. It's looking at those and it's giving me the 3 most optimal routes, and it's just incredible. The fourth is localized knowledge. So again, this applies very much for in agriculture, in health. It's about knowing that precise latitude, longitude, that point on the spot. Did it flood here? Did we have hail here? Do we have a winter storm here? What's going on in this corner of the factory, not just this factory in general or on the street or whatnot. And so we can get very, very precise in terms of location. The same from a life and health, right? We can look at not just that individual and kind of put together even within their family, but we can look at them individually. And so getting down to that level of granularity allows for the individualization, the personalization, of coverage that in the past, we simply couldn't offer as an insurance industry. There's a reason that insurance is kind of built on the law of large numbers, right? I pool all these people together, and in aggregate, that pool performs such that I collect more premium than I pay out in losses, and I have a little contingency or a little profit there. And so we're kind of used to that pooling mechanism, and we didn't care as much about the individuals. Yes, we wanted to create the correct pools, right, so that a less risky pool wasn't lumped in necessarily with a high risky pool, so we could differentiate on rate and underwriting. But we didn't care too much about getting down to the individual, and now we can get down to that level of granularity. Efficiencies and operations, there was talk on the panel earlier about technology such as robotic process automation, blockchain, and others. And if you think about it, there are so many. In fact, the pandemic has really, I think, shown a spotlight on this. There's still a lot of manual touch points in insurance. There's a lot of paper forms, or digital to an insurance company might be I put my paper form in a PDF, right, that you can download and print out and fill out and send back in. And quite frankly, I think that insurance is really been too expensive in general. I know here in the U.S., and I know it varies by country, but the expense rate for ratio for insurance is about 30%. That means 30 cents on every dollar is going to pay expenses. That's about 10 times what the credit card industry is, where you have large banks. You've got the card issuers, the Visa, MasterCard, American Express. You have a lot of regulation, a lot of fraud. There's a lot of expenses there, and yet they're still able to kind of, in essence, cover small losses. If my phone were to break, right, I could buy insurance for my mobile phone, or I could simply use my credit card. And I have some flexibility. If I use my credit card, I can pay just the minimum balance every month. I could pay it off immediately, or I could wait till I got some type of bonus, or some money for the holidays, or things like that. And I'm not incurring the expense until after the loss has happened, whereas insurance, I'm paying that up front. And so, again, I don't think we'll ever get down to 3% as an insurance industry, but if we could get the expense ratio down to single digits, that opens up just a world of possibilities. And you're already seeing this in some areas, like parametric insurance was mentioned earlier, right? Particularly, it's done well in the travel space, to where in the past it would have been too costly to offer those products, but now that you're able to drive through technology the expense ratio down, it opens up new products, new possibilities, innovation in the insurance sector, which is very, very exciting. And then finally, just the digital enablement of distribution. And I'll talk a little bit more about this, but there's so many more ways rather than just that traditional agent broker model that is still relevant. And I think there's a lot of people trying to figure out to work within that channel, but there's also ways to offer outside of that channel, not just through trying to greatly advertise and build up, brand recognition. I know that's been a real challenge for a lot of startups, just to compete with some of the spending and branding. Certainly here in the U.S. market, and I know areas like the UK, right, it's all about price comparison tools, and there isn't a lot of differentiate between the countries. And so you kind of have these two extremes where literally companies are spending up to billions of dollars here to get that name, that brand awareness out there, whereas in other countries, like, there's no differentiation between the two. It feels like there should be a balance between the two, and you're starting to see companies using embedded insurance, right, where you're embedding it within some other type of transaction, whether you're flying a drone, renting a scooter, things like that. Hey, do you want to insure this ride for $3, this flight for $3 more? Yes, I want to do that. Putting it through affiliate marketing channels, right, where that insurance, and if you read the fine print at the bottom, it may not be offered by the company that's selling you whatever product or service, but it's kind of underwritten through a partnership. And so there's just a lot more non-traditional, and quite frankly, particularly crop insurance, I think, and Africa is a great example. In India, of everything's done on your mobile phone, which is pretty remarkable. So you're able to extend your reach to customers that, again, in the past, it just simply wouldn't have been profitable to try to reach. So you're opening up. We know that you hear about the unbanked in financial markets, and we also have the uninsured or the underinsured. And there's companies out there that always talk about the insurance gap, and it's measured in the hundreds of billions of dollars of people that would buy insurance if they could afford it, if they could access it, et cetera, but aren't able to today. And through a lot of mature markets, we see very slow growth, 1-2%. But it's really, I think, in that looking beyond kind of this zero-sum game of trying to fight for that motor insurance customer, and really expanding our thoughts of, what are insurable risks essentially, and who are those audiences. So, in sum, right, this acronym SCALED, and in software development, you often hear of the Scaled Agile framework, going from kind of waterfall methodology to really, sprints and iterations, and being able to make incremental progress much faster in the software world. And I call this scaled to be agile, that you need to be doing all of these things as a company in order to be agile, because frankly, we don't know what the world holds for us. None of us expected a global pandemic to break out right at the end of 2019, beginning of 2020. And so we live very much in an uncertain world with accelerating technology. The trends, what's possible today is just, incredible, really, when you kind of step back. I think a lot of us take it for granted because it just kind of, gets incorporated in our daily life, just as the substitution from GPS from maps. Next slide, please. So one thing I always like to point out to folks is insurance, of course, we all know it's been around for centuries. We all know about the Lloyd's of London coffee house. We know that the term underwriting came from all those wealthy financiers that would sign their name on the line to insure, right, some of the merchant ships, et cetera. But if you step back and if you were to invent a product in 2021, you could do worse than insurance, because it doesn't have the physical capital required. This is not a company like Tesla trying to compete with Ford and Toyota and Mercedes-Benz and having to build a $1 billion gigafactory to build all the batteries, or to ship things globally from Southeast Asia all over the world. It is very much about bits in the computer, right? And so I think that there really have been three major barriers that kind of caused insurance to be somewhat stagnant as an industry. And you can see that through some of these emerging technology, that we're starting to see glimpses of ways to overcome those barriers to radically change insurance. And I contend that we're going to see more change in the insurance industry over the next decade than we have in the past 3 decades combined. The three barriers are really that need for trust, right? At the end of the day, insurance is a promise. That part is not going away. And so, right, how do I build that trust? Well, blockchain, peer-to-peer, right? There's many more ways to do that today than there used to be. The reliance on historical pricing for pricing reserves, capital thresholds, right? Insurance is unusual in the sense that I actually don't know the cost of my product before I sell it. Usually you have the cost of goods sold, and you have a certain markup, and then that's your pricing and your profit. We don't know that in insurance, but again, through some of the technologies we've talked about before. Think of cyber risk, for example. I actually wouldn't want to price cyber risk based on 3 to 5 years of historical data, because cyber risk evolves every second of every day, right? The threat this afternoon or this evening may have looked very different than this morning, and it's certainly very loosely correlated, if at all correlated, with what the cyber risk looked 3 years ago. And so, getting down to more real-time pricing based on the current conditions makes a whole lot more sense. And then, again, this lack of consumer engagement, quite frankly, insurance tends to be the type of thing that you don't think about it until you need it, and you purchase it, and then you move on with your life. And unless you have a poor claims experience or your premiums go up substantially, you're not kind of actively shopping your insurance. But there's many more ways, particularly this move from kind of reactive to proactive solutions, and I'll talk a little bit more about that later, I think can make insurance a little bit more top of mind and a little more salient for consumers, and there's a way to differentiate yourself there. Next slide, please. So I've talked about the accelerating pace of change. I think that is one that really typifies our world, the fact that we're all connected here today across different continents by GoToMeeting, and we're having essentially just a conversation about Insurtech and insurance is pretty remarkable. And again, we kind of take these days for granted. Just imagine for a moment what it would have looked like had we had this pandemic 10 years ago, and certainly 20 or 30 years ago, it would have been much, much different. We wouldn't have been able to connect safely through video conferencing that would be accessible to masses. It would have been very difficult to get information about what was going on, and we wouldn't have been able to keep our economies going in the way that we were able to. Again, there were definitely challenges, no doubt, but the pandemic would have been much, much more impactful 20 or 30 years ago. It was because of the pace of technological change that we were able to cope so relatively well over the past year. I think one of the things that we're seeing right now, where I kind of contend, we're in that green part of this exponential curve, starting to get to that acceleration phase. But I truly believe that we're just scratching the surface. We're just in the early stages of Insurtech, and some people, I would say naysayers out there about Insurtech, really kind of point to that lack of truly massive disruption on a global scale yet, is Insurtech being overhyped or not relevant. I think some of the validation we've really seen from the market of the past year, the success of a Lemonade IPO and things like that, those aren't just evangelists such as myself that are kind of out there preaching the gospel of Insurtech. That's real validation from investors across the world. And that doesn't mean that all Insurtechs are going to make it, even those that make it to an IPO. I think that's actually one of the open questions I have, is that insurance companies tend to be around for decades, if not centuries. And so now we have this whole wave of new companies. If they do have some type of exit, what happens then? What happens after the IPO, after the exit? Are they still going to be around for decades as we're accustomed to, or not? I think that kind of remains to be seen. But I truly believe that folks like myself that have been in the insurance industry for 25 years, it's a mistake to say, hey, I've been here for 25 years. Insurance change looks like this, so I expect the next 25 years to go like this. No, it's going to start radically increasing. And that's actually very helpful, because we are typified by being an older industry. And there's a lot of talk about how are we going to replace all these people that are retiring from the insurance industry with young people that aren't that interested in insurance. Well, frankly, all those people that are retiring are not going to be replaced by humans. Many of them will be replaced by technology. But I also think that young people coming into our industry are going to look at how we do things, and again, very paper-based, very manual-based, and they're going to find a brand new way of doing things. One of the things that I have to overcome when I talk to insurance carriers is getting over. There's almost a pride sometimes in inefficient processes. I think about airlines. If any of you have gone to the airlines, you've probably had this experience where they have these old green screens and they kind of, tab through different fields. And then you're like, oh my God, I can't believe that anyone is working in that type of environment today. But if you talk to that person that's doing it, like they know it. It's like a secret language, or it's like they know that F4 gets you here to here and whatnot. And so if you were to give them some type of modern GUI interface with cloud and all that, they would actually struggle, even though it might be more efficient to a brand new person learning that job. That person that's been doing it for 20 or 30 years, it's actually kind of a threat to them. It kind of cheapens their special localized knowledge that they have, and again makes it now possible for anyone to really take over that job. And so it can be a barrier to overcome in these companies when you are approaching them with opportunities to modernize. Next slide. So, we talk about the insurance value chain, and I will tell you that when I think about all the aspects here that you see, and I'm not going to go into a deep dive in every one of these, but hopefully you can see that scaled framework, that acronym that I described earlier. If you were to think about each aspect of the insurance value chain, one or more of those aspects of the scaled acronym can be brought to bear in these things. We've talked a little bit about distribution, binding coverage, back office. There's so many opportunities there. Underwriting and claims. One of my things that I was very fortunate to do in my career was be part of one of the very first analytics team at a large U.S. carrier. To be brought to the underwriting department. So in the past, advanced analytics, AI, that was kind of all the domain of the actuaries and later data scientists. But in underwriting, it tended to be very much conventional wisdom. Things like we won't write somebody's vacation home if we don't have their primary residence. And these are testable hypotheses that you can prove or disprove through analysis and data. And so I think just bringing in kind of a new mindset, and that could be new technology, that could be people from an outsider's perspective of things, bringing to bear in all these different areas. It's pretty remarkable. And certainly, being able to underwrite and write more business, being able to do things like take a photo of damage to an automobile and have it, kind of instantly give you an assessment of the damage. Is this a total loss? Then we need to take it to the junkyard, or versus it needs to get towed to the body shop, things like that. We're starting to see these, and again, we're just at the tip of the iceberg of what some of the possibilities are across these. Other areas, quite frankly, I will say within the value chain, you're seeing a lot in the marketing, lead generation, distribution aspect. And that makes more sense, right? You're talking about increasing revenue, selling more things. You're also seeing a lot of investment in the back office. Again, we're talking about kind of expense reduction. What we're not seeing as much is either in claims, and a lot of that has to do with, again, the systems, right? Replacing your claim system is exceedingly painful. And we know it's a critical customer experience, right? But it's something that people are very loath to disrupt. They certainly don't want to make their claims experience worse. And so I see underinvestment in that realm. And then we're also seeing underinvestment from support areas, compliance, things like this. Again, these are the type of people that typically haven't had a ton of investment in the past and are also very wedded to their existing processes, that it's very difficult to see opportunities there. But they do have, they're kind of rich with opportunities, not just to save expenses, but to actually streamline operations. And oftentimes I see, for instance, billing systems are actually the very limiting factor for companies. They can't do pay as you go, they can't do subscription based, right? You can only send you out an annual bill or things like that. And so you don't think of a billing system as being something that's going to generate revenue, but yet oftentimes it is a limiting factor, that until that billing system is replaced, then you can enable a whole slew of new products. And certainly from the core systems, and unfortunately, I would say from a digital transformation standpoint, a lot of companies have started to replace those legacy systems from the 70s and 80s, which is great, but they did so, what I would say, is almost exactly the wrong time, right before the rise of cloud. So now it's tough because you have this kind of sunk cost for some companies. They've spent literally tens of millions of dollars, right, trying to upgrade their systems, and yet just a few years later, had they waited, right, they could have leapfrogged even more. The other thing that's kind of interesting is in the past, those really large enterprise systems were the domain of the largest carriers, and now small to mid-sized carriers can also access, and a lot more agents and brokers can access that enterprise scale technology at reasonable cost, right, because of cloud. And so I just think, again, right now you're giving these kind of small, nimble players that don't have nearly as many resources, that maybe have found it difficult to overcome that resource gap in the past. Well, now we've just radically lowered the bar to give them access to similar tools, similar resources as the big guys. And so I think, again, you kind of heard a little bit about that at the previous panel. So I think that's going to cause a lot of radical change over the next decade, because now you've got the people with the right mindset matched to the technology to make a really meaningful difference in their markets. Next slide, please. So one of the critical things in insurance, and this is a small thing and it's really hard to quantify, it's deciding, when you look at your insurance value chain, right, and this really needs to be a conscious conversation and a conscious thought, you need to have a conversation of, where do I need to put the people? And there are going to be critical moments, and that might be, advising them on, what are my coverage needs? What are my exposures? Again, when we talk about personal lines, like that may be very clear. When we talk about health insurance, that might be very clear. But life insurance, particularly those that have an investment aspect to the life insurance, not just term life, and certainly commercial risks and more complex, right? People aren't insurance expertise, and they don't necessarily want to spend days upon days doing internet research. The analogy that I use is WebMD, and there may be other sources out there that you look for medical information. If I have a pain in my knee, I can go on WebMD, I can go on YouTube, right? I can go to all these places and decide, like, okay, does it seem like it might be arthritis? Does it seem like I might have loose cartilage? That maybe I, tore a ligament and I need surgery? But at the end of all that internet research I might do about this pain in my knee, I'm not about to pull up a scalpel and perform my own surgery, right? At some point, I'm going to go to the doctor and say, well, here's what I'm experiencing. Here's what my research showed, but can you help me? You're the medical expert here, and I think you're going to have a lot of that in the insurance realm as well. At a certain point, people want to hit the easy button, right? They're going to want to talk to an expert, and that might be, again, an agent or broker. That might be a claims professional. That might be some type of loss control specialist or others. But wherever that human is not adding value, right, they need to be replaced. And again, there's too many humans doing too many back office manual touches, phone calls, verifications, things like that, that frankly don't need to be doing. And so when humans are not adding value with an insurance value chain, those are the places that you really need to kind of target for digital disruption. But unless the product is very, very simple or seamless, I don't think you can go completely human free. I don't think you can go all digital. It's going to be important to have humans kind of along the way, but knowing where they add the most value, that's going to be critical. Next slide, please. So again, you've heard a lot about APIs here. I actually think the number of API connections that a company has should be one of their key performance indicators or KPIs and measured. I don't see that being touted by anybody, but it really speaks to the, do you have these kind of siloed systems that are on-prem, that are legacy, or if they had to have systems talk, you had to build this kind of hard bridge together versus do you have this kind of platform ecosystem approach? And quite frankly, right, there's going to be companies out there that don't exist today that 2 years from now are going to be an essential partner of yours. And you're going to need to find a way to be able to integrate them and offer them. And I think you're starting to see now kind of this rise of platforms and ecosystems. The other thing that I'll mention is, I've done a lot of work with carriers that have, worked hard to build APIs, but yet now they're kind of, core systems provider is doing all that natively, right? You've got like Guidewire in their marketplace and things like that. And so I think, as a carrier, it's like, it doesn't make sense for you to build out hundreds of API integrations when your platform provider is going to do that. So I think you're going to kind of radically see that change. And I think you just have to really talk about what is your integration strategy. You have to just embrace that we need to have this kind of platform ecosystem approach, but then you also need to figure out where should those connections happen? So as a startup, right, you also need to figure that as well. And I have conversations with startups that say, hey, I've been trying to sell into the insurance space. I've been trying to sell to the agents, brokers, or carriers, but maybe I should be talking to the agency management system providers or the core systems providers instead. What do you think? And so, at this point, I would say, I don't think you need to rule one of those out. I think, you need to explore what makes sense for your business, right, for your operating model. But it's not always clear cut that say, oh, I just need to sell to the insurance carriers because those are the ones that are manufacturing the product. Next slide, please. I use this slide. This is a company called Helios, and it just kind of shows the difference between severe weather and what's possible. Where in the past, right, insurance was very reactive. I call it a reactive reimbursement. Tell me when you have a claim, and I'll investigate. And assuming everything checks out, I'll write you a check or give you some money in your account. And what people are looking for is, I want to be protected, right? I don't want to have this loss in the first place. I don't want to have this bad thing happen to me. And so, again, that gives an opportunity really for that user experience, that customer experience that I think is kind of anathema in insurance, but we see in other aspects of our lives. And people will be willing to pay more for a seamless experience, right? And feeling protected. And that's really what they want, is if they can avoid having the loss in the first place, or if they have a loss, right, have it to where it's a minimum amount of disruption. You probably heard the term resiliency, right? The concept of resiliency is that bad thing. It's not that it doesn't happen, but that when it does, like, you're able to bounce back quicker. So, in this case, we're talking about severe weather and having sensors basically built into like solar panel type things where it can detect that severe weather's happened. If there's any damage to the roof, it can report that directly to the carrier, and the carrier can reach out and say, hey, we see that you had severe weather minutes ago in your neighborhood. Are you okay? Do you have any damage? Or we think you do have damage. We're going to send somebody out there. Could you take a couple photos for us and send it in, and we'll kind of see. Or it could say severe weather is coming your way. You need to take these precautions, right? Cover your crops, bring your vehicles into garage or some type of carport, things like that. So those are the ones that, right, customers are really going to value, that they feel like that insurance company is truly their partner, rather than just, hey, call me if you have a claim, but otherwise, I don't want to ever hear from you. Next slide. Again, I want to spend a lot of time here, but again, RPA, right, optical character recognition, natural language processing. There's so many technologies today. And it's interesting, oftentimes, trade-off conversations in this space tended to be like, well, we want to cut back expenses, but then we actually might be making our customer experience worse by doing that. So what's the trade-off there, right? Like, is the increase in customer experience worth the added expense? I will tell you, in my travels in insurance, there's a lot of low-hanging fruit out there where you actually can do both, right? You can save money and make your customer experience better at the same time. And so, again, doing kind of a holistic review of operations, figuring out where those opportunities are, and then doing some type of prioritization exercise makes sense. I'm sure at some point you'll hit some where you say, okay, yes, there's a trade-off here. But again, in my travels, most areas of insurance have opportunities where there's no trade-off necessary, right? This is a win-win. It's a win for our customers and a win for our bottom line. Why would we not do that? And I actually see people not moving as aggressively as I think that they should be, to take advantage of those opportunities. And again, I think there's a mindset issue there. Well, that's the way that we've always done it. So I think companies that really move fast to seize on those opportunities will have a lasting competitive advantage. Next slide, please. And again, blockchain or distributed ledger technology, I know, in the hype cycle, it probably has gone past the hype and is in a bit of the trough of disillusionment. And I think there's been some successful deployments, but not necessarily at scale. But it makes a lot of sense that there's opportunities here. One of the reasons that insurance is so complicated is it's a financial instrument and a legal contract all rolled into one. And, I think one of the things that's unique about insurance is that you kind of have this, I call it the triangle, where you've got, agents and brokers, right, the carrier, and then the insured. And those are the parties that are making the contract, right? Those are formulating the insurance contract. But yet there's so many other parties, tens, if not hundreds of other parties. It could be a medical provider, it could be a repair facility, you name it, that are actually part of that contract, that provide some type of services or value, or need to know about that contract, but they only need to know some things and not other things, right? So they need to know, right, that this person is a valid, right, policyholder, and they have a claim, but they don't necessarily need to know what their bank account information is or things like that. And so there's a lot. This is where a lot of the manual processes come in. Is this calls all day or emails back and forth or whatnot, right? A lot of these needs for verification. And so I think when people look at, again, some of these back office processes and all these different touch points with all these different parties, and think differently about, how can we conduct that? What is the process today? Oftentimes you'll find humans as part, if not all of the process. And so, how can we cut those out to make those digitized? Again, the customer never sees any of this back office verification type stuff or back and forth, right? So it's not necessarily degrading the customer experience as well. And it does drive significant expense for insurers. That's one of the reasons it's 10x of credit cards. And so I do think that companies have given up a little bit sooner than I think, because they're looking for maybe a quicker return on blockchain and DLT that they've seen in other technologies. And to me, this is very much a long-term play, but very meaningful over the next decade, and particularly, kind of 5 to 10 year time horizon. Next slide, please. So kind of wrapping up my comments and welcome any questions that you guys have. It's really about thinking modular and very much kind of building blocks. I think insurance in the past has been very much kind of these large behemoths, and it's really about agility here and saying, look, we don't know what the future holds, but we do know a couple things. We know that risk is not going away. We know that uncertainty is not going away. We know that desire to have downside protection is not going away. And so those needs are going to be there. How can we serve those needs? And how can we, again, be more flexible, be more agile? Next slide. So, again, it's a lot about the mindset. We talked a little bit about this before, those folks at the airline gate and things like that. And it's really about having people that have the mindset of seeing different ways to do it. I recently saw a presentation by somebody at Amazon, and they quoted, of course, Jeff Bezos as part of their presentation, but there was an aspect of it that I thought was really fascinating. And Bezos said, and I'm not going to quote it right exactly, but it was something like, we are okay knowing that we will be misunderstood for long periods of time, because that is characteristic of innovators. And so I love that phrase, we're willing to be misunderstood for long periods of time. I've talked to so many Insurtech startups that are really trying to sell into the insurance, and it's an incredible sales cycle, 12, 18, 24 months, and they've reformed as an MGA or this and that, right? They've really kind of circled many different ways to try to tackle the problem they're seeking to solve. And so it's really about having the fortitude to not give up, to know that oftentimes your problem that you're diagnosing is in fact a problem in the insurance industry, but whatever solution you originally come up with is often not the right solution. You're never going to get it right, I guess, as a solution the first time out. So you will have to iterate several times, and just having the patience and the fortitude to do so. Next slide. So, last thoughts, I love this kind of, less weightlifting, more yoga. I think for the insurance industry, it was all about kind of size and strength, and you don't think of us as being a particularly agile industry. And so that's really what we need to go with the modular thinking before. You can build muscle just as well through yoga. Now, there are usually different types of muscles and kind of more supple and rather than that brute strength that you have through weightlifting, but it's muscle nonetheless. And so I just think, again, a different mindset is critical in this space. So with that, go to the next slide. It's really just kind of, connection information for me. If any of you want to connect on social media or elsewhere. And, of course, there's a lot more in my book, The End of Insurance as We Know It. You can find out more by going to the endofInsurance.com website. It's available on both Amazon and Book Depository. So depending on the country that you live in, either Amazon or Book Depository, which is based out of the UK, will have worldwide delivery. So next slide, please, and then we can wrap up, and I'll open it up for any questions.
Arun, over to you. Arun, you're on mute.
Thank you, Mr. Rob Geller, for that wonderful presentation. 25 years of experience bundled into these few slides. It was amazing. And I was also part of certain years through the technology integration part of the journey, where I did have two implementations in insurance industry. One was around knowledge management, and the other one was around what you call converting the legacy systems into the modern cloud-based systems, where we did use SAFe, and I was an agile coach. So I do understand the complexity and the kind of technologies which are still there, which are getting what you call converted. But this also made me think about the other things which I was reading, kind of the bullet train project in Japan, which started getting built while people in certain other parts were thinking that, okay, now only air and road would take over, but the trains are still there and have got modernized. So that gives me a kind of a belief that there could be some system that is getting built up, ground up, which would be so more resilient and which would be as well as running 60 trains in one day all across what do you call Tokyo and Osaka. But again, before I summarize, you're an industry influencer, and it's a privilege for me to summarize your presentation. I would open up for one question from the audience, and then I'll take the privilege of summarizing your presentation. Any questions, please?
I've got a question, Arun, if that's okay.
Please, Jeff.
Yeah, thanks. Great presentation. Lloyd's Blueprint 1 put a lot of emphasis on the insurance sector writ large, improving risk data, specifically for complex risks like terrorism and things like that. We run a hotel violence database that's getting some traction in the hotel sector. Where do you see improved risk data for complex risks like political violence, insurgency, counterterrorism, things like that? Where do you see that going in this market?
Yeah, that's a great question, Jeff. So I certainly, I'm not an expert in that space, so I don't want to comment in terms of like, oh, you only need this data source or that data source. I will say this though, and I'm glad that you brought this question up. There are risks. I know, a local example here is flood insurance in the U.S. So flood insurance is covered by the federal government, the National Flood Insurance Program. And they have all sorts of people that go out and they make these flood maps and things like that. And there's a lot of appetite in the private market to take on that risk. And they're creating their own flood maps that are not politically influenced by, do you want this neighborhood to be in a flood zone, to, have to pay, required to have flood insurance to get a mortgage and things like that, right? And it's been, to me, it was very obvious of like, hey, if you're the federal government, you have things like terrorism and other stuff that maybe the private market isn't today looking to cover, but yet needs that backstop. Here's something the private market is looking to cover, like, why would you not take that risk? And oh, by the way, they may not take over all of your book, but if they would take, 2/3 of it, and there's this whole idea of, oh, they're skimming the cream, they're leaving us with the worst stuff. And I'm like, well, but if they take 2/3 of the risk, right, like that's still better off than you holding the whole bag today. And it's been surprisingly hard. I mean, there's definitely been movement that way, but you just have so many vested interests, right? The people that are working in that government agency, each of those floodplain managers to say, you don't really need to make floodplain maps anymore, right? We have private entities that can do that and are using a lot more advanced. So, really where those entrenched interests are, and then who is benefiting from potentially subsidized coverage today, right? And so these things do require, I guess, a lot of negotiation and really, stakeholder analysis, right, to understand where they are and not. And one of the things I do see as a trend that I think is actually very exciting and is probably going to be brought to bear in your example, Jeff, is people are looking for opportunities in a particular country to do kind of almost a proof of concept, right? And then to say, hey, if we're able to do it in this nation, or 2 or 3 different nations that may be geographically disparate, right? Not next to each other, but disparate, different continents, whatever, to prove that it can be done, then they can kind of point to those and then kind of go for bigger targets. And that seems to be a strategy that's worked very well, rather than just kind of focusing on the big markets and beating your head against the wall for months on end.
Right. Okay. Thank you.
Yep. Thanks. And we do have one of the senior most influencers in the industry with us. So let's allow one more question if it comes.
Sure thing.
Okay, so I'll take the opportunity to sum it up, and then we'll open up for the questions. Thanks a lot, Rob. And the presentation started with the map example and how data and GPS could make a difference. I do my bike trips, and I do know. And the scaled, the way you did bring it out was very, very valuable. Makes it easy for us all to remember, and we will surely be implementing that in all our practices right from today. And the price comparison mechanisms, as you did mention, between the developed economies and the developing and upcoming markets, where a few of our panelists also are from today, that was a valid and a really eye-opening point, and that also brings out the way in which brand awareness should be created and approached. Then we did talk about the embedded insurance, which we are seeing gaining much more popularity in India, given the ecosystem's maturity that we had seeing it here. And the insurance is now ideal for our digital age. If you do take a look at it, you summed up very, very well that you did say that it is all about the risk transfer ecosystem. And that if you look at it from that particular point of view and that particular system's point of view, a lot of things become very, very clear. And in India, I'm seeing IoT in crop insurance, POCs happening, and also what you call proof of concepts and suggestions for implementations happening around cyber risk, and also the what you call the auto damage insurance, where things are getting automated with the no need of paperwork, reduction of that paperwork starting to happen here. So I'm also expecting, and it was also eye-opening to see that in certain parts of the world, not every car is still insured. So one thing that came to my mind is that though you did, and we're going towards rapid process automation and other automation of the processes, there is a big scope for the market expansion to happen, and so a lot more of the things we can see. Then to sum it up quickly, you did the center of it, apart from the ecosystems, was all about, again, APIs. So that is the key, and we did have Mr. Chatterjee, who delivered the first keynote address, telling answering one of the questions, telling how they use the industry ecosystem APIs at the moment to deliver some of the products they have created. And insurance is one of the best investment opportunities, which are there still. And the KPI is API, and we do look forward to the next 5 to 10 years to see all the things which you predict come true. And we will keep seeking your answers as we go. Thanks a lot, Mr. Rob Gala, for the insightful presentation.
Thank you so much, Arun.
Hi, Rob. How are you? This is Ganguly, and I have a question for you.
Yes, good to see you, Ganguly. How are you doing?
I'm good. I'm good. Good to see you too. So this question is, I think earlier Arun also have asked, that is how to create a right fit insurance product for skill development industry. Mr. Arun have already asked one of our speaker. I would like to ask again, and we have seen examples like Capoli. They come up with a new innovative products for the freelancers, for the small businesses. And so if you can give some of the input, how to create, if somebody want to create a right fit product for the skill development industry professionals.
Yeah, I think that's a great question. And again, I won't pretend to have the secret sauce or anything, but I will tell you that the companies that I've seen that I think are the most successful in this area, well, they'll pick a particular niche, is they have a blend of insurance experts, but technologists as well, that don't have any necessarily preconceived notions about that particular space. And then the user, like the interviews, the research, they really understand their customer fully, and they don't cheat on basically doing their homework, their customer research in terms of designing the product. And then that's where just constantly iterating, prototyping, throwing things out there, getting reactions to it. Again, not presuming the answer, not presuming that you're going to get it right first. You mentioned Tapley. There's a company out of Australia called Upcover, and they do similar. They do a lot of moped delivery type, so not necessarily a car, right, but kind of something lower. That's very, very common in Southeast Asia and in many other parts of the world. And they would just kind of hang out where these people gathered, and they would a lot of these scooters and bikes are essentially rented or leased, and so if anything happens to the bike, right, that driver or that rider, they have to pay the company where they're leasing it from, and that can be a substantial cost, of course, and it is a very dangerous and hazardous job as well. And just really going out to all different parts of starting in Australia and then elsewhere, like finding these people, interviewing them, really understanding very, very deeply their needs. There's always going to be insights that you don't think of, and then being able to have those people that understand that world to have a conversation. We often talk about languages and translating English and French and Spanish, etc. But each of these industries, you mentioned the skill development, we have our own language. Insurance is its own language, right? And one of the reasons I wrote my book was to actually give that kind of language lessons to non-insurance professionals, so that you could speak to the insurance industry or understand some of the basic concepts. And so it's about having the conversations, number one, but it's also about having people that really understand that world or understand what questions to ask, blended with those that can are not biased by the way things always are, to build a solution. So hopefully that answers your question.
Oh, yeah, definitely.
Well, I think that brings us to the end of this conference. We had some very interesting talks from the starting of the event. The 2 keynotes, 3 panel discussions. Every panelist and speakers have touched upon some pressing issues, some very interesting points, some great opportunities that are lying ahead for the Insurtech and the insurance industry. There are sectors like agriculture, touched upon by Maria, that was very interesting. And of course, sectors like motor insurance, health insurance, and others. And especially, Rob, it's always a delight to hear you talks on the APIs. That was like adding a flavor to today's discussion. It was fantastic. I mean, thank you very much to bringing this up for all of us. It was very new and to learn, as well as some, an area to research upon. Thank you very much. And thank you to everybody, all the participants, all the speakers, panelists, and the co-host and the organizers, the anchor, Mr. Arun Batula. Thank you very much for your time, effort, and making this show a very successful one. And I definitely look forward to connect with you all and collaborate in future Insurtech developments. Thank you.
Thank you all. Thank you, Surya.
Thanks, everyone.
Okay.
Thanks, Surya. Take
Thank
care,
you
everyone.
very much.
So,
We'll connect.
We would like
Bye-bye.
to thank all the keynote speakers, Rob, Saurav, and all the panelists, moderators, bottom of our heart. And again, thanks to Surya for creating this platform for showcasing everyone's and also Mr. Arun for coming and hosting along with Surya. Hope all the guests you have enjoyed our session. Without you, it not be possible. And I'm wishing everyone a great day ahead from the other side of the world, and from here, good night.